The other thing that's a bit weird is this thing about 20%, because you end up, so if you build a business, you kind of want to keep as much equity as you can. Like when you built Galaxy, you want to keep as much equity. But we're kind of forcing people to not hold much equity.
Well,
and I'm not sure the incentives are aligned, because you get a lot of, kind of the excess capital gets dumped onto the market pretty quick as soon as lockups come out. And the management team or the founders don't actually hold that much of it in the end.
Hey everyone, and welcome to Everyday Finance. Strong yearly trend of Bitcoin has slowed down in what used to be called Uptober. After setting new all-time highs earlier in the month, Bitcoin's price has dropped into a narrow trading band between $107,000 and $111,500. This is about 2.3% less than its starting price at the beginning of October. Bitcoin's value has gone up almost 20% every October since 2013, making it one of the best months for the currency in history. If prices drop even a little this year, though it could be the worst October in more than 10 years, in past bull cycles, like 2017 and 2021, strong October rises of over 40% were common. But this time, momentum has slowed. Analyst Timothy Peterson says that Bitcoin's prices usually go up the most at the end of the month. However, there isn't much time left for a big rebound. Investors are now looking forward to the next Fed meeting in hopes that any sign of loosening, such as a drop in interest rates or the end of quantitative tightening, could set off the rise.
Yeah, dead right. So listen, why has crypto been heavy, you think, versus equities? I mean, all the tech stocks have been ripping higher. It's been a really easy trade. Well, crypto's just been choppier.
Yeah, listen, we had a huge run in some ways.
Yeah.
And crypto is about narrative and flow, right? And so what's the story? You had a great Bitcoin story for a while, and then it kind of ran into selling. I mean, we sold 9 billion ourselves for one client. Like,
I know, with almost no impact, bizarrely.
But that swallowed all that treasury company buying.
Yeah.
And so without that 9 billion, you're probably significantly higher. Right? Remember, prices are set on the margin. And I think there were a lot of people in the Bitcoin world that had rode this so long that finally decided, I want to buy something. I'm not going to sell all my Bitcoin, but I got a friend that bought a yacht, a friend that bought part of a sports team, and so people trimming because it had been a great run, and you're just digesting that turnover.
And do you think that's the main supply has been old OGs plus miners and stuff like that? Is that the 100%. Main supply, you think?
That's the only supply we've seen. And the other piece has been, remember, Ethereum was dead, and then all of a sudden you've got the Genius Act plus Tom Lee and Joe Lubin with their DATs, and it became a buying machine. And so ETH had a spectacular run in the last, 2.5 months. But that's, you go from 1,800 or 1,600 all the way to 3,800. That's a pretty good run.
Yeah.
And so, on the year, these things are whatever, 30%, 32%. Not stunning, good year.
But usually it's back end loaded as well, almost every time.
And so that's the question listen, if you looked at the normal 4-year cycle, you'd be lightening up and you'd be getting flat into Christmas. Like, what could be different? Dangerous freaking words. It's different this time. There are two things that could be different. We are going to pass a market structure bill, and that plus Genius is going to allow, at one point Apple's going to have stable coins on their iPhone. Like there's no excuses anymore that there's regulation around what's a commodity and what's a security and the SEC saying we want you to be on chain. And so I think there's an acceleration of the existing giant players in consumer and financial markets getting into crypto. We are going to see tokenized stuff, probably starting with tokenized equities and mortgages and everything else. That's good for the narrative of all these level 1, L1 chains. You also have a president who says, I'm going to pick a dove. and we are risking Fed independence. Again,
did we really have independence, though? Honestly, I don't think we did. I mean, from yelling to go from one to the other kind of shows that it's all one thing now.
That was I thought that was the dumbest move a president had done, is taking a Fed governor and making the Secretary of Treasury. Literally, I thought it was the dumbest thing. I said that over and over. But Chairman Powell's his own guy. You got a president screaming that he's stupid and he's this, and he just says something, smiles, and says, I'm going to do what I think is right. And so I do think there's Fed independence.
And what's coming out of this regulation? Do you have any wind of that yet? When it's going to come?
I think they're two different approaches, but you're going to broadly, I think, say that 20% threshold of ownership is decentralized. And if you're under 20, open source code, a few other things, that's a commodity, and it'll be CFTC regulated, and the rest will be security. What's more interesting, I guess, is once you know that, like, where security tokens can trade, and are there going to be different levels? Are you going to have to go through the whole SEC process to become a security token? And is that going to be easier than it used to be? Right? This SEC is unbelievably forward in wanting, like we tokenized our equity. That was all done compliant. We're the first tokenized equity that's the same as an equity, right? There's not but it's trading on solid superstate, which is pretty much a walled garden, right? It's only cool once it starts trading on Hyperliquid or on some decentralized, decentralized platform, right? Could be Uniswap, wherever. And then you're like, whoa, now we're out in the wild. It feels like this SEC and this administration is pro DeFi. So, like, for the simple viewer, why was DeFi such a threat? Well, all the regulation around Know Your Customer that JP Morgan and Galaxy and everyone else has to go through is different in DeFi. And you saw today, in prediction markets, right? The Jeff Sprecher putting $2 billion into
Polymarket.
Like, I was out this weekend in Vegas at the fights, and I was sitting with a guy that runs 5 casinos, and he was like, that scares me because we have unbelievable regulatory requirements to run a casino, right? If you're DraftKings or Fanatics Draft, sports, or, any of these gambling sites, phenomenal regulation at state level and federal level. And now you're saying, you guys can just do this unregulated. And so there's going to be lobbying back to say that's not fair. In some ways, it isn't fair, right? You can't make one group go through 19, exams. When I got okayed to run casinos, when we were at Fortress, we bought Penn Gaming, and there were 13 states we had to get licensed in. We had to give every check we wrote for 15 years. They went through every last thing of your financial history and your criminal history if you had it. You got a ticket for, getting in a fight in college. It's a huge process, costly, invasive to say, hey, we trust you to run a casino. And now we're saying, no regulation. But
there again, crypto's like the world's biggest casino, and there's almost no interference now in what we do on it, right?
Yeah. And so that's going to cause more friction. But right now, the gates are open.
As the cryptocurrency market waits for the US CPI report, price of Bitcoin stays between $107,000 and $111,000 per coin. It is well known among traders that inflation numbers can cause sudden changes in the market. Bitcoin's future may depend on the next report, which is expected to show that core prices went up by 0.3% and total CPI went up by 4%. Even small changes from these statements could send shockwaves through the cryptocurrency markets, where cash can quickly disappear. For example, a lower reading could lower yields and boost confidence. On the other hand, A higher CPI reading could make the currency stronger and send Bitcoin down. In any case, traders are getting ready for instability after the numbers come out because people are already feeling uncertain.
The other thing that's a bit weird is this thing about 20%, because you end up, so if you build a business, you kind of want to keep as much equity as you can. Like when you built Galaxy, you want to keep as much equity. But we're kind of forcing people to not hold much equity.
Well, because...
And I'm not sure the incentives are aligned, because you get a lot of, kind of the excess capital gets dumped onto the market pretty quick as soon as lockups come out. And the management team or the founders don't actually hold that much of it in the end.
It's a really interesting process. Like, is it a decentralized company or not? Like, the idea of decentralization wasn't centralization. It wasn't, I'm going to build a company. We already have the model for that.
Yeah.
It was, we were going to have this new model where if it's decentralized rideshare, where the owner, the riders, the customers, the engineers, and the investors are all owners and no one really owns it, right? That, like, the whole decentralized thesis was a new business model. And what we have is a lot of people wanting to use the old business model. I want to hold most of the profits for myself and just use this easier regulatory framework. And so, listen, there's plenty of ways to be a centralized, business on chain. Just register as a security.
That's right. You can use the equity and all the token. They're two separate things. But it feels like, I was speaking to Mickey Malker about this, that this is all going to collapse, and you're kind of proving it with your equity being tokenized, that the difference between token and equity, I don't know whether it stays.
No, it's going to collapse, but you're still going to have a regulate, like, I'm not going to be able to issue equity willy nilly and say, hey, invest in my, like, certainly not with the U.S. framework. And what the SEC chair told us, which was really interesting, is they're not prosecuting people right now because the rules aren't clear. The moment the rules are clear, they're going to be all over this.
Yeah.
Right? You break the rule when the rules are clear, they're going to come after you. Right now, there's no rule. Like, what's a security? And Gensler was willing to prosecute you in this OPEC rule set, and Paul Atkins said no. And so there's kind of free reign until this bill comes out.
And when's the bill going to come out, we think?
I think, well, the government changes this a little bit, but assuming the government opens in the next 2 weeks, I think by mid-November, mid to late November, you have a market structure bill done.
So let's talk about Galaxy for a bit. You're up to ridiculous amounts of things. So catch us up with what you're doing. You got the announcement today of Galaxy One. You got the data center business. You've got, you've got everything. You've tokenized your equity. You've got to talk me through it, because you're up to all sorts of things. And I can see there's a lot of retail interest. You and I were chatting about this offline the other day. There's a lot of retail interest in Galaxy now, because it seems to be really focused on all of the kind of key points that people are looking at. So a lot of people really want to know what you're up to.
Listen, we had not done, it's hard to tell your story when you're listed in Canada and you're a US based company, and you're not allowed to. It's like pre-selling a market and all these SEC rules. And so we've done a much better job telling our story. And we've got a good story to tell. We have a unbelievable data center business, right? We have 800 megawatts already leased out. That's 20 billion plus.
And explain to people how that came about, why you suddenly came into the data, because people won't put two and two together, but it's best to explain it.
Yeah. A little bit of luck and a little bit of skill. We got into Bitcoin mining after 2021 because we had made so much money. We had put a lot of it into an opportunity zone, and Bitcoin mining is a great opportunity zone asset. And so we said, okay, let's Bitcoin mine in opportunity zones. And as it turned out, we didn't own our own data center. So we were going to places that we could host that were in opportunity zones. And as 2022 started unfolding and the price of Bitcoin came down, a lot of those hosting agreements turned out not to be as firm as you'd think, right? There was either deception or bad judgment on our part. And we were like, oh shit, we have all these chips and no place to put them. And so Chris Ferraro, my president, was like, I'm not doing this again. We're going to own our own infrastructure. And so we searched for infrastructure, and there was a company named Argo, public company, that was under duress. And we gave them a loan, and we bought their data center from them. That gave them enough money to pay back the debt they owed and stay alive. Well, that data center called Helios turned out to literally be not just the best Bitcoin mining data center, but one of the best AI data centers. And when I first got my phone and started playing with ChatGPT, we started talking about, well, how do we play AI? And I was quite frankly on a plane with a friend of mine who was an expert at power. And he gave me the whole, we're running out of power thesis. And I told him at my data center, and he's like, dude, I'll buy that. I was like, well, and all of a sudden people started coming to us, and we were smart enough not to sell it. We did our homework and quickly realized, out with the Bitcoin mines and with the AI data center, we have a strong team down there. We made relationships with a lot of the hyperscalers and picked CoreWeave to be our partner. It was a risky bet to some degree, but they were at the same part of their growth trajectory as we were. And now on our first 800 megawatts, which is what we had, they have leased it out for 15 years plus two 5-year extensions. Their credit's getting better by the week, which is great for us. And so we are in the process of building. The first data halls come online in the first quarter, and that's when it starts cash flowing. But in 2.5 years' time, when it's all built out, it'll be $700-800 million of free cash flow a year.
Raoul Pal says that focus and accuracy, not being able to see the future, are more important for survival in the modern world. Referring to GPT's trading playbook, he stresses that traders should lower their leverage before big events like the CPI release because liquidity often disappears quickly, causing big slippage. For people who still want to be involved, short-term put options that last 1 to 7 days can protect them from sudden price changes. Pal says to stay objective, wait to reevaluate until the chaos has died down, make choices based on facts instead of emotions. The story of higher for longer rates is still true, which keeps risky investments under pressure while inflation stays close to 3%. Pal says that in this day and age, AI will replace 99% of traders. This isn't because they are lucky, but because they are better at timing, patient, and managing risk. He leaves us with clear instructions: be accurate, stay alive first, and make money later.